Hello and welcome to this episode of Two Grey Beards. Right, so what happened last week that is of note, Andy? What do you think?
Well, good morning, Nick. As we expected, last week was not much. There were earnings that were, off around, in line in some, better in others. And the PCE, which was the thing we all waited for the end of the week, was also not a big deal, pretty much in line.
So basically, what we are seeing is that bonds and equities are all very much tied together. As one performs, the other performs. TLT is up like 6-7% for the year, and equities are up 6% for the year, the SPX. So they're still very much tied together. And this relationship just basically seems to be continuing.
Yeah, I'd also say that the other bit of news during the week was once again very, very strong performance in the auctions with fantastic demand for twos, fives, and sevens that were auctioned. Total of $115 billion of bonds were auctioned, and they all went extremely well.
Yeah, so we know who's buying. As you said, these are non-competitive buyers. These are foreigners, uh, foreign central banks buying to most probably protect their currency as they have surplus dollars which they invest in USTs. Not a huge concern at the moment, but basically what it all tells us is that we're having a sort of stability around a very significant level, which I would say is the times 18 price earnings level in stocks, and I will include a link to that, what I'm talking about in the Excel file,
Yeah, you're
so everyone
mentioning
can see.
PE.
Yes, we are. That's where we are, and we are in a period of stability. And we have to basically now wait for the Fed next week to see what they will say. But I think we will agree that everything that's happened so far this year, and really for most of December, has been a significant loosening of financial conditions, which probably the Fed doesn't like.
Yeah, that's for sure. Basically, I looked at what's happened over the last 2 months, and when you look over the last 2 months, not much has happened. All of stocks, the S&P is literally spot on where it was December 1st, and TLT is about the same price. So while there was a fairly meaningful sell-off, probably a fair amount of tax selling in December, all that has been recovered, and we're right back up to the levels that show a fairly easy set of financial conditions. And yeah, that's while all the inflation data continues to point to declining inflation. Ultimately, rising financial conditions will drive animal spirits, will drive people to want to buy goods and services, and could generate some more inflation. Okay, so that's what's happened last week. And what I'd say about this week is, we have some ideas on how to move the portfolio a bit, but most of the events of this week are going to be centered around the central banks, and the Fed in particular will be announcing its interest rate hike, then have a press conference. And I think the first thing is that we need to say is we're going to be back to you on Wednesday, regardless of what happens and what the Fed does, because it is an influential bit of news and may move markets. But I don't expect much. Do you, Nick?
No, I think the Fed has painted itself into a 25 basis point hike. I don't think the Fed likes to surprise markets, even though this current easing of financial conditions probably would tend to warrant something more aggressive. I don't think they will do it. I think they will probably try to jawbone the market in the press conference, but I don't think that that is going to be very effective in the long term. It might affect the market for a few days, but not longer. simply because as long as inflation keeps on surprising to the downside, the very long end of the bond market is not going to react to their very short term changes in interest rates. And therefore, the equities which are priced off the longer end of the market, of the bond market, are also not going to react very much. So I think we're in a period of nervous stability with the upside being capped by where we are in terms of price earnings multiples. We will see if the multiples change, but I doubt it. In any case, it'll be very interesting to see what Powell says during the press conference, and we will be back to you on Wednesday, as Andy said, to give you our interpretation of what he said and what the market implications of that are.
Right. Just in terms of the next 3 days, there is other news that's relevant. One is that there's the month ends, and often there are flows associated with month end. The likely flows are sells, but that's small and not worthy of your time. The other bit of news is the government related to the debt ceiling conversation. The government announces on Monday at 3 o'clock, and then again on Wednesday at 8:30, the amount and composition of new debt that they're going to issue. It's called the quarterly refunding announcement, and I pay a lot of attention to it because it shows the supply of bonds. We talked about the demand of bonds that is very high with foreign central banks buying a lot to manage their currency, but the supply matters too. And so we'll have data on that. And I expect it to be high, even though the debt ceiling looms. And so that might have some modest impact on treasury prices and thus equity prices, but we'll see.
So, Andy, what do you think we should do about our portfolio, if anything, ahead of the Fed? I want to remind you, we still have an offer in SPY, which wasn't filled last week. I think we should definitely pull that and discuss it again on Wednesday.
Yeah, I agree with that. There's no reason to have anything out there except way away from the market. And I'm not going to advocate doing that sort of thing ahead of the news. What I would say is when I look at our portfolio, I continue to look at a portfolio that is defensive. It's defensive because we see all the things we've said, and it's defensive because cash pays a high return. And so when you look at our portfolio, and it's, 26, 27% equities, but it's heavy in cash. And so, that is, we don't have I wouldn't describe our positioning as being particularly out of balance, like in equities versus rates, or commodities, or gold, or anything. It's fairly balanced. It's just heavily in cash. So as we discuss what we're talking about, we believe that a long only portfolio should have a little bit of everything, including sometimes a lot of cash. And that's how we're positioned. And so when we think about reducing our positions, in particular, I think we're going to mention certain equities. It's not because we hate equities. It's because we think there's a need to have equities in a portfolio, but we're already heavily in cash. So that limits what we might otherwise do because we feel strongly about the cash.
Absolutely. I would completely agree with you, and I would be loath to reduce a sensible allocation below 20% in equities. We are at the moment around the 26, 27 mark. And the one thing that we had, which was XLY, because I felt that the expectations for the consumer were just too bearish in December and at the beginning of the year. And XLY has returned, nearly 15% this year.
That was a hell of a call.
Yeah, it has outpaced SPY 3-1. I think that is coming to the end. People will be interested to know that XLY is mostly Amazon and Tesla. That's nearly 50% of its portfolio. I think those events are out of the way. I think that's repriced. whether it goes up another 1, 2, 3, 4%, it's of no interest to me. I think the reason why XLY was there has disappeared now. And I would want to sell XLY and have more cash and wait for events on Wednesday.
I agree completely. So XLY, we let go.
Right. And the other thing that we might discuss is gold. I think that too has done most of the heavy lifting it's going to do for a while. So maybe let go of a little bit of gold up here.
Yeah, I mean, I've been for my alpha portfolio, I've been short all assets since December 1st, and hence informing part of the reason why in this long only portfolio we're so heavily in cash from my point of view. The only thing that's not worked is gold. It's been up 7.5% since I've shorted it, and all the other assets are down a little bit. So I think it's overdone. And so stepping back, I think that you always should own some gold in your portfolio. And so I support trimming, and I was thinking about a third.
I think that's probably very sensible. And I'll show you these orders going in the next section. So this is what our account looks like. And with all the allocations, these are the orders that we are putting in for next week. We are cancelling the SPY order above, which never got filled. And we are selling 28 shares of GLD to reduce the position by roughly a third. And we're selling all 24 shares of XLY, which has vastly outperformed, as you can see, nearly 15% on the year. And it has really served its purpose. So we're going to go into cash with that. And those are the orders for the week. I wanted to have a very brief word about the Excel file that is included with every episode. When you open it, basically gives you roughly the allocations as they are at the moment with the latest prices. In the various tabs, you will see chart packs, and basically here you can have a look at all the charts of everything that we are talking about, of all the instruments we are talking about. In the next tab, the broker statement, you have, if you click on it, either to the link or on the file, you will have the broker statement, so you can follow exactly what we are doing and see that what we say is what we do. Then we have the order entry, which is basically what I'm going to put in for next week in terms of orders, and it'll be all here so you can review it at your leisure. But finally, the section I've included is the research and the books. Here you have all the research from various houses, which we found interesting over the course of the week. All you have to do is click on it and it'll take you to the research. On this side, you have books, but also what we were talking about, the Blue Angels, or the multiples that stock prices are trading at, will be here. And if you ever want to have a look at what the bond yield curve looks like, you can go here, and that will give you the exact shape of the bond curve as it is at the moment.
Thanks for watching, everybody. As a reminder, we'll be back with a video assessing what happened during the Fed meeting on Wednesday evening.
Thank you very much indeed, and see you on Wednesday.